everybody. Welcome to Anti-Ruggers United. Today we have an AMA with DeFi Skeptic. So let's get started by having you guys introduce yourself. Tell us about your, the team members who's in here, about your history, your background, your work experience in the real world and in crypto, and like how you guys got together to work on this project. And then after that, we'll go talk about the project details.
Yeah, for sure. Hey, thanks for having us. My name's Chris. I'm the founder of DeFi Skeptic. On the AMA, you also have Jake and Kieran. So Kieran is sort of the web guy, coding guy, cybersecurity expert. Jake handles the community. Not on the call is Joe, who is our UI UX designer. And that's our team. So we all met online through, just various projects over, last probably year. And just came together. When I founded this idea, these are the first guys I asked, just due to our past conversations, past history together. So collectively, we bring a lot to the table. I myself have many years of quality assurance, risk management, and project management related experience. I've been in crypto since 2015. The rest of the guys, they've regarding their sort of role, they have background in that as well. All of our bios are on the website if anybody wants to check them out. I'm not sure if Jake or Kieran will be able to talk during this AMA, but they are on the call.
Hey guys, how's it going? I'm Jake. Thanks for having us. Like Chris said, we really appreciate you guys taking the time and everybody here joining and listen. Like Chris was saying, we had our previous conversations, and he reached out. I was more than honored to jump in as community manager. My mission as community manager is to just bring the community together, and my past history in crypto, which in-depth crypto has just been a little over a year, but I've seen crypto and been involved with crypto since 2019. So I have a good understanding of what's going on. Being in depth in the past year, I've gotten to be involved with a lot of communities, and one thing I see a lack of sometimes is communication. So my mission and my goal is just to bring trust and good communication to the community, and so just happy to be here.
All right, so you guys are all met online. What areas are you from? Like what state, country, city? You don't have to go that specific, but
yeah,
state
we're all
would be
US
nice.
based. Yeah, we're all US based.
So you guys are not locally. You don't know each other like locally. So you're not from like the same like local area. Correct?
No. Yeah, not the same state.
Okay, all right. And from what I see, you're KYC'd, but you're not doxxed. Is that correct?
Correct. Yeah, I was in a project before, as well as Kieran. We were doxxed, and there's people getting into my LinkedIn profile, sending me emails to my work account. I don't even know how they got my work email. It's totally separate from my crypto life, but I got a kid, I got a wife. I'm not really looking to expose them to the crazies that are in DeFi. As DeFi legitimizes itself, over the next few years, and some of the crazies leave, we might be looking to dox, but not right now.
Yeah, I mean, definitely, I agree with you. I mean, I'm not doxxed myself currently, and it's pretty much for the same reasons. And like, so I could actually, do what I do and call out scammers, find the good projects, and not really, have to deal with all these trolls in my, socials and my girlfriend's socials or anything like that. So it's nice, to have the freedom.
For sure.
All right, cool. So you guys met each other online through previous projects, right? And I take it you're all doxed to each other.
Yes, yeah, we've had multiple video conferences with each other, and I've got all of Kieran's information. He has all of mine. Both of me and Kieran are on the KYC certification. Actually, if you look at the KYC certification from Interfi, it specifies our names specifically. I had them add that in there just so people know that Kieran and I are the only two KYC'd, as we'll be the only two handling any code or funds related to the project.
Okay, so who would be the owner of the contract, and then who's the developer for the NFTs in the contract?
Yeah, right now I'll be the owner, and our plan is to either get that onto a multi-sig, or I'll just give Kieran the the seeds to those wallets, being that he's also KYC'd. I mean, we haven't launched yet. We're still working some back end stuff. So as of right now, it's deployed on mainnet, but I'm the owner as of right now.
Okay, all right. And can you tell us maybe a little bit about, you don't have to say specifics, but like, were you guys previously in other projects, like as core team members or just like mods? And like, if so, like what happened to those projects?
Oh yeah, man. I mean, I've been in crypto since 2015. I got into BSC basically right when it started. I couldn't even tell you how many projects I've helped mod in. Where they're at all now, I have no idea, but you're talking about, 7 years of being in the crypto space. I personally have been involved as a core co-owner member of one project. That was a project that had sort of similar visions to this one. I ended up leaving a week after launch, just because the person that I formed it with, we had a very strict operating agreement. It was a registered business in America, and he was a lawyer by trade, so our operating agreement was rather stringent to the point where it was just inhibiting, us from growing the project in a way that was efficient for us to use our individual expertise. So I said, you know what, hey, you got it. Here's my half. I'm just gonna move on and do my own thing. So here we are, DeFi Skeptic.
All right, cool, awesome. All right, let's go proceed to the next stage and give us like the introduction, the elevator pitch, like the sell, on your project, like the overall scope of what you guys are all about.
Yeah, for sure. So we originally formed the platform. We launched the website in January, and it was essentially just to start providing project vetting. So I've been a very extensive researcher into things. I'm very meticulous. I've got multiple years of crypto experience, as well as risk management experience in the real world and finding exploits, vulnerabilities, things of that nature. So I started sort of collecting information on Discord, and just storing it in like a private server for myself, just to catalog projects that I liked and, kind of like do vetting for myself. I started sharing with friends and people started liking it, and they're like, hey man, this is awesome, appreciate it. So, why don't you make this public? So then we went ahead and launched DeFi Skeptic, the website, to essentially provide this information, and, vet projects as sort of a more stringent audit. So it's not just looking at a contract, it's looking at the entire project as a whole. If you go to the website and you pop down to project and vetting process, it'll go into detail with that. But shortly after, getting that live, we realized there's a lot more things we wanted to do as far as products and services go. So, we created Skeptic Token with the idea to sort of be our inner ecosystem utility token. And we designed it in a way that we hope appeals to multiple people. So, the long-term crypto DeFi enthusiasts that just want to see DeFi grow, and also appeal to the short-term people that, are just looking to make a skeptical gamble. So we implemented it in a way that would appeal to both, and we can definitely get into that. But some of the products and services that we provide right now are project vetting, and then some other ones that we have are our arbitrage bot. So arbitrage as a service, to where, and these are all listed on the website under products and services. You'll see project vetting, you'll see contract creations. So we provide full custom contract creations for any developer looking to have a contract coded. They can pay in BUSD for full price, or they'll pay in SKP, Skeptic Token, for a 10% discount. Arbitrage as a service. Basically what this does is, if you're a project with 2 liquidity pools, this will be a bot that is tax excluded, and it'll bounce between both liquidity pools, trading them for arbitrage opportunities, and 80% of the profit that it makes is kicked back to the project that uses it. So essentially all they have to do is give us the token information, tax exclude the bot's contract, and this bot will run on their liquidity pools and give them 80% of the profit that it makes. It's free to use, it's free to sign up. And last one that we have is DS drops. This one is currently not in production. It's ready essentially, but it requires our token to be launched. So because it's a direct payment method for providing users tiers. So how this will work is vetted projects or projects through our Launchpad partner, Apollo Ventures. We provide vetting for them. Projects that have been vetted, they'll be able to do a promotional airdrop campaign. So where they'll provide tokens, and users that are subscribed through a tier model, they'll be able to receive those tokens through promotional airdrops. And it just kind of gives the project a way to, expand their user base, get a little bit more, promotion, a little bit more exposure from the traditional routes that people typically use through actually providing tokens to, a lot of people at once. We have some other products and services that are listed in the white paper. So if you go to roadmap and services, you can see the ones we have complete, the ones we have in development. We'll be providing contract audits here shortly as well, and then our future plans. So that's a little bit about the products and services that we have going on. One thing that we are doing is with Skeptic token, we're not doing your traditional private sale or pre-sale. So we're doing an NFT sale. The first Skeptics NFT series will be 250 NFTs with 20% being rare. So 50 of them will be rare, and they get sort of their own little set of benefits. But what these will do is the funds raised from this, so we're looking to sell them at 1 BNB a piece for 250, so 250 BNB, and that will fund the token launch. So we won't be selling any tokens prior to launch, no team tokens, no private sales, no pre-sales. And what that allows us to do is set an initial floor price that is unbreakable. So, when you see in other launches where they've sold tokens prior to launch, they often will get a dump below launch price. That will literally be impossible with this project because not a single person will own tokens prior to liquidity being established. I'll stop there for any comments, questions before we can get into the NFTs.
Oh yeah, awesome. I actually really like that idea. I don't think I have seen that done before. That's a very unique idea, is not to have any tokens to give out, and it's just the NFTs that you will fund the liquidity with. So basically all the BNB raised will go to liquidity, correct? Or like
well, yeah, essentially to the token. So 20%, 50 BNB will go to the Skeptic token BNB liquidity pool. The same amount, 50 BNB, will go to the SKP BUSD liquidity pool, and 50 BNB will go to the burn fund, which we'll talk about. It's basically a deflationary mechanism we put in to where it'll allow buy and burns on the token, and it's not volume dependent because it builds its own interest through external interest bearing accounts. And then 100 BNB will go to pre and post launch marketing.
Okay, I'm really curious about the interest and the interest-bearing accounts, but I think we could probably talk about that a little bit later.
For sure.
Okay, so you're gonna have 250 BNB raised through NFTs, and you're gonna have two liquidity pools. So
yeah, and so having the two liquidity pools allows us to run the arbitrage bot, which provides us more stability to our liquidity in general. To our token. So traditionally, if you just had two liquidity pools and you did not have your own arbitrage bot, your token's going to get arbitraged anyways. There's arbitrage traders out there that have their own bots, but the problem with those is that as an arbitrage trader, you're fighting gas and you're fighting tax. So say the token has a 10% buy and sell tax, 20% round trip. So as an arbitrage trader, you have to have a profit, on the trade, a discrepancy in price between the liquidity pools of more than 20%. Because if you buy on one side and equal it out on the other side, a buy and a sell, you're 20%. So your profit has to be above 20% in order for you to even make any money. But the way this will work is it'll be tax excluded. So we'll get all the arbitrage trades. So all the arbitrage traders out there external to our project, they'll pretty much never get an opportunity to do an arbitrage trade on our liquidity pools. And that allows us to generate revenue for our own platform instead of giving it away to all the arbitrage traders out there. And the way that'll work is for the NFTs, So our common set, the common numbers 51 through 250, and every NFT is numbered on the NFT itself, its own unique identity. Benefits for those NFTs, they'll get 3% pool of all SKP volume, so buys, sells, and buy and burns. They'll get 45% of the profit that the arbitrage bot makes. They'll also be added into an exclusive Telegram community. In there, we'll just give insights to new products and services, beta testing, new partners and affiliates, as well as some BNB bonuses. And temporarily, what they'll get is 20% of the interest from the burn fund. Once their BNB contribution has been paid back, which will probably be relatively quick, that 20% interest allocation will go away, and it will go back to solely burning the token. Those that hold the rare NFTs, the 1 through 50s, they get everything the common guys get, except they'll be additionally put into a periodic raffle / lottery. And that's how the NFT sales will work. So getting into the token, and I'll stop there, let you ask any questions, then we can go into the token.
Okay, so the benefits, let's go over that again real quick. So 250 NFTs, 3% of all Skeptic token buy sell. So this is the tax. All right, so I'm assuming there's a 3% tax to go along with this 3% of the volume.
We do have a tax. Might just cover that next, but it's 10% total. We also have tax discounts if you run through a discount swapper.
Okay, so you get the token. So the arbitrage bot, let's talk about that for now. So is this going to be only used for your project, or will this be used, you can use it for other projects or other tokens too?
Yeah, so any project can sign up for it and use it for free, assuming that they have more than one liquidity pool. So any project out there that has, token in BNB and then token in anything else, they'll be able to use this for free. They can sign up for free, they can use it for free, and they'll get 80% of all the profit it makes directly to a wallet of their choice. And then on our side, we retain 20%. And that's just straight profit for them that they would likely not have otherwise, unless, they had their own arbitrage bot.
But you think it's actually going to be like valuable in the long run? Because one thing is, not a lot of tokens, at least in the BSC space, have multiple liquidity pools, and second of all is because of taxes. A lot of times arbitrage is not it's not profitable. Like if there's only 10% difference in price, but the tax is like 20%, then
yeah, exactly. So that's why it will be tax excluded. So the arbitrage bot will be tax excluded, and that just basically guarantees it to win its arbitrage trade. So when it makes a trade, tradition, like I was saying earlier, people that have to run their own arbitrage trading, they have to account for tax. But with the project excluding it from tax, it can make a $5 trade and profit off of all of that. Even if the change in liquidity between one pool or another is like, say, 1%, it can still make profit off of that because it's not dealing with tax at all.
Okay, so if I'm a dev, I have to sign up for it. Let's say I want to use your bot. I have a project that has BUSD and BNB. So I sign up for it. I exclude the arbitrage bot from taxes, and then any of your users could use this bot to make profit basically on my token every time there's a difference in price. So so it's basically guaranteed that the price should stay very close to on
this
all
will
the chains.
essentially exactly this will essentially level out and maintain sustainable price between all of your liquidity pools. It'll keep them equal without allowing external arbitrage traders to profit off of your project when they're not even interested in it at all. This allows you to maintain stability between your liquidity pools and receive that profit for your project, which then you can do whatever you want with. Kick it back to your holders, use it for growth, whatever.
This is actually gave me some ideas. For example, let's say you have a project and it's fairly high tax. So like the higher the tax, the less volume usually after, especially after launch, the volume kind of dies down. Holders are holding, they don't want to sell. Buyers, they bought whatever they want. Basically, it kind of restricts the free trade of the token with the higher tax. And then you can have issues with CMC, with other things, because a lot of times the trending requires volume. So your token kind of falls off, the hot list or the trending list. And if you want to add it back on there, or if you want to get volume, seems like it's an idea where tokens that do not have more than one liquidity pool, you could just make one just for the purpose of this bot, and then just trade tax free between with the arbitrage, and that could generate a lot of volume that could help with trending like DEX tools and CMC and all that. So that
Yeah,
this could be used as almost like a marketing idea for projects.
But potentially, it won't just make a trade. There has to be an arbitrage opportunity. So, for example, say the price is 2 cents in your BNB pool and 2 cents in your BUSD pool. Somebody else would have to make a buy or sell in one of those pools to make a price discrepancy between the two, and then the arbitrage bot will snatch it and collect the profit between that discrepancy. So there has to be
of course,
some type of volume. It doesn't generate a ton of volume.
Yeah, but every time there's a buy or a sell in one, assuming starts off equal, there's always going to be that discrepancy, right? So every time there's a trade on one chain, it should always create a discrepancy in the other chain, especially if the liquidity is not the same, or it takes let's say 10 BNB in buy volume to move the 10% on this liquidity pool, but it's only like 5 BNB in the other liquidity pool. So a lot of times the arbitrage is going to create, it's going to be opportunities because it's hard to keep it in sync because the liquidity is not the same. So one is easier to move than the other. So this gives me some ideas. This could be like a great marketing even opportunity for other projects to generate volume instead of just creating bots that just trade themselves up and down, actually do it in arbitrage between liquidity pools.
Yeah, for sure. And let me get into token. We can come back to our products and services because I'll tell you how it's kind of going to work with our token. So as far as sequence of events go, we'll do our NFT sale, the 250 BNB, where NFT holders get all those benefits we were talking about within the ecosystem. And that will fund the token launch for Skeptic token, which is our utility token. It's already audited by InterFi. As far as our tokenomics go, 75% of the token supply is going into initial liquidity, and that'll be split between the VUSD and BNB pool. 25% is going into a repetitive 3-month lock, and that's not team tokens or anything. That's strictly for two things really. If we want to add a liquidity pool farm for our own token later down the line, so we'll need tokens to drip into that as reward. And if we don't do that, or even if we do that, we also want some tokens in reserve for future dexes. So having that reserve allows us to, provide more benefit to the platform, as well as expand its growth through, more dexes. The total supply will be 50 million, and there'll be a 2% max wallet limitation per person. As far as tax structure goes, so ours is a little unique in that standard buy and a standard sell. And when I say standard, just like buying through PooCoin or PancakeSwap or something like that, wherever you normally buy from. 10% tax for buys and sells. 6% will go into the token fund, which we'll get into. And then 3% will go to the NFT holders, and 1% will be burned. Now, if you buy through the discount swapper, which is just a smart contract that facilitates swaps, it's a tax excluded swapper, to where you'll use BNB through this contract. You'll send BNB to it, and what it will do is it will tax the BNB directly, and then buy tokens, and then send you your tokens at with the tax taken out. And so to encourage that, we're giving a 2% discount, so it'll be 8% total. And why that's beneficial is that way we're not taxing tokens. So for anybody that's familiar with how tokenomics works with any project, when you buy tokens, you put BNB into the pool. tokens come out, and then before they get to your wallet, the project taxes them, so they have tokens now. In order for them to get that into BNB to like do anything with, or, you know, they have to sell it. So a lot of times what you'll see is the contract will accumulate tokens to a threshold, and then it will sell. And you'll get like a little red candle on the chart. And you know, you can see these. It's usually the same amount every time. They're kind of like you know, periodic through the charts, the same size red candle, and that's just the contract converting its tax tokens to BNB. So by providing this method of buying, we don't have that problem. We still get to tax the purchase, but instead of getting tokens, we're getting BNB. So it's better for the token, you know, longevity and the price chart for the token itself, because we'll never have to sell tokens if everybody buys through this method. So to encourage that, we're giving a 2% discount.
All right, so
and then,
this contract, has it been audited too?
No, but it's already verified on BSC. You can see it's very simple, very small amount of code. All it does is just receives BNB, sends it to, you know, taxes the BNB, sends it to the pool, grabs tokens, and sends it back to the purchaser. There's nothing really more than that in there.
Okay, who wrote the contract for this one, or where'd you get it from?
So one of our partners actually wrote the contract for this specifically. They'll be listed on our website here soon. They're just we're finalizing some details with them.
Okay,
I think I'd probably give
that's a
their
pretty
name.
cool idea.
It'll be DAPT LLC. They'll be providing a lot of different services and stuff for us.
All right, cool. Yeah, I like that. I like that idea actually. It's so in your normal contract, you know how you have 10% buys. So when you interact with the other one, the discount swapper, does it have separate taxes for that one wallet specifically? Is that why you get a discount? Because if you go through that that contract's the one buying the tokens. So your normal contract has a different tax structure for the discount swapper.
Yeah, so like I was saying, the standard tax will be 10% for buys, 10% for sells. But if you buy through the discount swapper, you'll just pay 8% for tax. That's because we want to encourage it to be used, because then we don't receive tokens as tax that we have to sell and negatively impact our own price chart. So people
It just basically sells it right at that point instead of selling it later, you know, like
No, it doesn't sell tokens at all. It doesn't even take tokens. So say you send in
BNB.
Yeah, say you send in 10 BNB, or let's just do easy math. You know, 100 BNB. The tax is 8%. So what it's going to do is it's going to take 8 BNB as tax, and then use that 92 BNB to buy tokens, and then send you your tokens. So we never even touch tokens. We never have to sell them.
Okay, so that's how you guys got around the limitation of the regular type of contracts with BSC. How you have to basically sell tokens to get BNB. So you're doing it. That's actually that's a really good idea. Actually, I like it.
Yeah, it's way better for the token if people use that route, because you'll say if everybody use that route, you'll never see the contract selling on itself for tax tokens, because it won't have any.
Yeah, and it won't create any like unnecessary FUD, right? When everyone's like, why is there so much sales going on? Like, why is the contract selling all the time? Because I feel a lot of times like investors don't understand the way the contract works. And especially the devs don't set up correctly, where it's selling too often, or it shows like the contract selling like all the time because it's selling almost on every sell. And because you know that basically that this contract activates when someone else sells, and it sells in the same transaction as them. But on, you know, DEX tools, it shows up as a contract sale, and people kind of don't understand that part. And then it started flooding, like, why is the contract always selling? Like, what's going on? And then sometimes, you know, the devs will not be available to answer that all the time. And then I see projects get ruined by FUD like this, where they don't understand the way the contract works.
It happens a lot. So you'll have like a project with high volume that has a tax. You'll see a lot of repetitive sells, you know, because it has to accumulate. The contract has to accumulate tokens to a certain point before it can sell. Typically that threshold is somewhere around like 0.5% or 1% or something. of supply, or maybe even 0.1, really whatever the owner sets it to. But it's usually low, somewhere between like 0.1 and 0.5% of supply. So as the contract receives those tax tokens and it accumulates, it'll hit a threshold, and then it'll trigger the swap, and that's basically a sell event. So by doing this route, we don't have to do that at all. We can just tax the BNB up front, still get the tax, but we never have to touch tokens, and thus, there won't be as many sell events. If everybody went through this route, there would never be a sell event.
Yeah.
Well, not a sell event from the contract. Obviously, there would still be sell events from people that sell, but not from the contract.
Yeah, or you could always make it because I have a token right now too that we're like a nanocap, where I make the sell event where it's not often enough to where it takes like maybe a day or two for it to accumulate, but I just manually do it, because technically it does it automatically after it fills a certain X amount. But sometimes I just manually like dump, because what happens is a lot of times when it accumulates a lot of tokens and your threshold is set too high or somewhat high, the people start panicking because they're like, why can't I sell? Why is the slippage so high? Because the contract has to sell their tokens and it's going to cause higher slippage. And they're like, why can't I sell with the slippage that it's supposed to be? It's because the contract's actually going to front run them, and it's going to drop the price even more. So it's something to definitely be careful about. And this idea kind of eliminates that whole problem. So I think
exactly.
I really like that idea. Okay, so let's talk about the token fund then.
Yeah, so anytime there's tax, the tax is allocated like this. So we have the first skeptics, who are the NFT holders, 250 NFT holders. They get 3% of all buys, sells, and buy and burns. 6% if bought through traditional routes, 5% if bought through the discount swapper, goes to the token fund. What the token fund does is it's just what we're calling a wallet. It's a tax receiving wallet. But what that does, actually it goes to a tokenomics facilitator contract first, which handles the swapping. But anyways, we get the BNB from that, and then how we'll work it is the burn fund will receive 70% of that money that the token fund receives. And then 30% of that will get kicked back to just marketing the token itself. So that's how we sort of make a sustainable model of just, making sure we have money for marketing. Nothing from the token is funding our development. So, our development will be funded by our products and services, our partners and affiliates. So the token itself is just its own ecosystem to support, its own self, essentially. But how it will work is when funds are put into the burn fund is going, and that's, just a word we're calling it, but the burn fund is going to invest that money into liquidity pool farms of other pairs. So for example, everybody's familiar with PancakeSwap. You could do like Cake and BNB. So the Cake and BNB pool pays, whatever amount of interest. I think right now it's like 30 or 40% or something APY. That's just an example. There's hundreds of liquidity pool farms out there. One that we'll probably be using a lot is BuySwap, which is another DEX similar to PancakeSwap. Their BSW BNB pool, I think, is paying 70 or 80% or something like that right now. But we want to try to average the interest rate of the burn fund somewhere around 100% APY. And what we'll do with the interest as it accumulates, so 1 to 2 times a month, we'll harvest the interest. We're not going to say when that's going to be or what time it's going to be, because then people will start targeting their buys and sells to take advantage of that. But it'll be 1 to 2 times a month, and you'll know after it happens. We'll say like, hey, we just conducted a buy and burn. We're just not going to announce when we're going to do it. But how that will work is the funds that it's received, once we pull the interest, 50% of that interest will be used for a buy and burn on Skeptic token. 30% will be recompounded just to ensure the fund continues to grow. And 20% of that interest will get kicked back to the NFT holders. Once the NFT holders have been paid back their 250 BNB total, this shuts off, and then that 20% goes to the burns. So it'll be 70% of the interest doing buy and burns. Using this model, it allows the burn fund to continue to grow. So with the compounding feature, you don't have to rely on token tax. Obviously, token tax will fuel it more, but the burn fund will essentially grow indefinitely without relying on token volume. So that means the buy and burns will essentially grow without relying on token volume. Token volume just accelerates those numbers. Additionally, the arbitrage bot, 45% of the profit it makes gets kicked into the burn fund as well. So it'll be growing from that additionally.
All right, so the burn fund is basically like an investment vehicle in a way because you're relying on that APY.
Yeah, essentially. It's just an interest, targeting account that grows interest that we can use to conduct buy and burns.
See, the thing is, that's great though, like in a regular market, let's say market consolidation or a bull market, but what about in a bear market? Because I mean, 100 APY is okay, but then your token's dropping 80%, you know what I mean? Like for example, Pancake Swap or that Pancake dropped from like $20 down to like 6 or something in a couple months. I think it's back up to like 10 or so, but you know what I mean? Like you have to be careful with that because sometimes in a bull market it's great, in a bear market you'll be losing money, so do you have any kind of contingencies for that, or are you just kind of thinking, well, it's a long-term project, so over a long period of time it's still going to be better just to hold and get the APYs even if the price drops? Or what you could do is the burn fund, is it going to be constantly added to, right? Because the thing is like an investment strategy that people do is they put in like an X amount of dollars a month into like some stocks or mutual funds. So let's say $500 a month. When it drops, they just afford more, right? So like, let's say it dropped 50%, they end up buying double. It drops 75%, they end up buying 4 times for the same amount of money, right? So eventually, as long as it doesn't go to zero, it's going to go bounce back up and start, a bull market again. So with the way the burn fund works, can you explain the way it's going to accumulate the tokens? Because I'm trying to figure out, is it going to be like I explained it, where you're going to have, because you have the 1% tax that's going to be added to the burn fund, right? And also
No. So 10% tax total on the token. 6% of that goes into the project. Out of that 6%, 70% is put into the burn fund. So the burn fund will constantly be receiving money anytime the token is traded. Additionally, the arbitrage bot will feed it 45% of the profit it makes. So the burn fund will essentially always grow. It's also going to be investing in liquidity pools essentially nonstop, whether there's a bull market or a bear market. It's always going to be cost averaging. In the event of a big bear market type thing, we could always preemptively move some of the investments into BUSD, USDC, Tether type, stable pools. But in reality, it doesn't matter. It's a long-term project. Whether, we buy a bunch at the top and then buy a bunch at the bottom. The point of the burn fund is not to make money on the fund itself. It's to ensure that it's interest generating to continue to do burns on the token. That's its sole purpose.
It's perpetually, right? Should be perpetually sustainable.
Its sole purpose is just to grow and always do burns on the token.
Okay, yeah. So the fact that the external source of money is constantly being added, as long as there's a volume in the token, that's kind of what I explained earlier. Like if there's constant buys or constant money coming in, even if it's a bear market, then you just end up buying more of it. So once it rebounds, it's going to be even more profitable, right? So so that's good that it's going to be like a sustainable, or there's going to be funding from the outside, not just the reinvesting.
So it'll get token tax, it will get profit from the arbitrage bot, and it will get compounding interest from the fund itself. So 3 ways that the burn fund continues to grow. Additionally, just from the buy and burns that's doing, also built into the token is a 1% burn from any buy or sell. through standard buying and selling methods. So that's one burn method. Also, anytime somebody uses Skeptic token to make a purchase of our products or services, we burn 10%. And then you also have the burn fund. So we're burning tokens from 3 different routes.
Okay, cool. And okay, so we talked about the tokenomics, the structure, tax structure. Okay, 75% is going to be added. So you're collecting the 250 BNB. You're
250.
adding 250. You're adding 100 to liquidity pools. The other 100 is going to marketing. 50 is going to
the burn fund.
The burn fund. Okay, so you're starting off with the burn fund already.
Yep.
That you're gonna be jump starting basically the LP gen or the interest compounding.
Yeah, and honestly, it's a perfect time, right? We're in a bear market, so if we can sell out these NFTs and get this funded, let's think about if the market rebounds and BNB goes back to where it was a few months ago, we've just doubled the size of the burn fund. So you might go from 50 BNB, worth whatever X amount of dollars to doubling that money, fiat value wise. So your power as far as burns goes doubles as well. So you might be, for example, you burn $1,000 a month in tokens, and BNB doubles in price. Well, now you're burning $2,000 a month in tokens. Additionally, the burn fund's always growing through tax, arbitrage, bot trade, profit. So it has the potential to grow exponentially and make serious burns on the token.
All right, so what's the use case of the actual token? Because you guys have the different products and services. You have the vetting, the arbitrage bot, the DS drops, all of those, the contract creation. So how does a token interact with all of this?
So project vetting, you'll pay all of our like white labeled type services. So project vetting, contract creations, contract audits. You can pay in BUSD, or you can pay in Skeptic token and receive a 10% discount. And then if you pay in Skeptic token, 10% of that will be burned. If you pay in BUSD, we'll just take 10% of that and do a buy and burn. So either way, anytime somebody buys a product or service from us, tokens will be burned. And that's how we're implementing our token into our ecosystem. That's sort of through a payment method. Additionally, through DeFi Skeptic drops or DS drops, which is that promotional airdrop campaign, you have to have Skeptic token to purchase those tiers. You can't buy with BNB or BUSD or anything, so you'll have to have a Skeptic token. And the way that'll work is there will be 3 tiers. This is listed on our website as well. But the way that'll work is there'll be 3 tiers. So you'll connect your wallet, you'll select the tier you want, you'll pay with Skeptic token for whatever price that tier is, and then that puts you on a subscription. So that'll be a quarterly subscription. And as projects opt in to do the promotional airdrop, which we're actually partnering with some AMA platforms, we've already got a Launchpad partner. So this service will be put through that as sort of like an add-on. Or if projects go right through us for vetting directly, they can, interact with this option as well. So we anticipate, quite a few projects taking this route. It's always good to get your tokens in the hands of multiple people, through promotional events. But the way it'll work is, say there's 3 tier 1 subscribers, so there's 3 allocations, and there's 4 tier 2 subscribers, so there's 8 allocations, and then you got 2 tier 3 subscribers, so there's 6 allocations. Total, you have 17 allocations. Pretty simple ratio math. If you're tier 2 subscriber, you get 2 out of 17, so you'll get 11.7% of the airdrop. If that was how many subscribers there were at the time. So how much you get of the airdrop just depends on how many people have subscribed, really. And selecting your tier allows you the ability to control how much you want to put in, comparative to how much of the airdrop you want to receive. It'll likely be very cheap at the beginning. We're thinking probably like tier 1 starting off at like $20. That way we can scale it up as the platform grows. But yeah, very exciting product that we're looking to put out and sort of work with other projects to kind of provide a means of different type of promoting for them.
Yeah, I like that idea too. Actually, honestly, a lot of your ideas are really great. Like, I don't say this often. Like, we always see the same type of projects. Like everyone's too lazy to do like a unique or like something new or be the first. It's always like the 10th meme coin or the 50th game that's like just like some Mario reskin. You know what I mean? So it's actually refreshing to have projects that have some unique or fairly different ideas. So this actually I really like that fact.
Yeah, and one of our future utilities is going to be DS Merge, DeFi Skeptic Merge. And the way that works, the vision for that is I think there's 3 categories of projects. So you got like, good projects, ones that are doing well, they're producing what they said they're going to do. There might already be fully operational. Then you just have complete scams. I mean, that's pretty self-explanatory. And then you have projects that aren't scams, but they're just not good. And I'm sure everybody has a few of those in their wallet, to where, you put money in and the project just sort of died off. Maybe the team fell apart. Maybe it was just a dumb idea to begin with or a bad idea. And the project just is not doing anything. So we want to provide, our whole platform is centered on bettering DeFi. So project betting, ethical contract coding, ethical promoting. That's why we're partnering with, AMA providers and trying to stay away from some of the ones that, are really bot loaded. Nobody, as a project owner, you don't want to pay to go speak to a bunch of bots. So ones that we're affiliating with are non-bot loaded ones. Our whole platform is centered around just making DeFi better. So if we can do that through helping out failed projects, that's another utility that, we want to add. And the way this would work is there's tons of projects out there like this. We already have a few interested in our service once it becomes live. You can easily see this. Just go to CoinMarketCap, filter out BSC, and then just filter out like lowest market cap. And you'll see projects that are basically dead. You go to their communities, there's nothing happening. The devs are nowhere to be found. Maybe one post every now and then. And that's not because, they're scammers. It's just because like their project is at a point where they can't do anything with it. We want to provide everybody a way out. So the project team would benefit because when they're merged over, they'll get a small payout. That way they're just not walking away with nothing. The prior project users, they're migrating to our token. So, they're migrating from something failed to something not failed. Our users will benefit from all those new community members, as well as the liquidity that's brought over, making our project grow even more. And then the token and platform itself will grow from that additional exposure and all those new members. So, if you say you bring over a project that had 1,000 users and, maybe 500 of them come into your Telegram, well, now you've just added 500 people that will talk about your project. So you're exponentially growing your project through word of mouth. But how this would work is we have 2 methods. So, you have liquidity pools that are locked and liquidity pools that are unlocked. Whatever the situation is, it essentially works similar. But how we're going to do it is the BNB will be collected from the project, whether that's through the liquidity pool is locked. So our merge contract will have a accumulation window where people can come and give us those tokens, and then when the window is over, we take those tokens and we pull BNB out of the pool. Or if the liquidity is unlocked, the owner can just give us the BNB. But what we'll do is we'll take the BNB, we'll do a tax excluded buy on Skeptic token. So we're not adding liquidity, we're doing an actual buy on Skeptic token. The tokens we get from that buy will be retained, and then all those prior project holders can claim their Skeptic tokens at whatever conversion rate is applicable for that project at that time. So it benefits everybody involved. The project team gets paid out, the users get transitioned, our project grows, and just another thing we can add to the ecosystem of bettering DeFi.
Yeah, I love it. I mean, I think one of the reasons I love it too is because we have the same vision and that's what we're all about over here. We want to, destroy scammers and prop up all the good projects, so basically instead of scammers getting money, it'll be the hardworking devs that deserve it, and also of course the investors. So if the investors and the devs win, the scammer is going to lose, and that's what we're all about. Also, we're going to be having our own launch pad. Also, like the vetting thing, or with like AMA lounges and marketers, how like most of them are worthless. They just endless money sink. A lot of fake groups, a lot of fake marketers, fake Twitter promoters, or like even if they're not fake, they're not worth the money. You're going to pay $10,000 and get like 2 BNB worth of buys,
Right.
And a lot of projects fail because of that, because of marketing, because they don't know how to market. They don't know how to spend the money wisely. They basically get free money. Like if it was their own $20,000 hard-earned money, they'd probably think a little bit more. But if they raise it overnight in a pre-sale, they're like, yeah, let's just throw 10K at this guy and 10K at that guy, And then of course it doesn't do anything for them.
We will not be doing that. Our marketing plan is going to consist of press releases globally. So I've already got everything lined up for our marketing plan. Really, all we're in need of is just the funds. So I got press releases lined up for, globally. That extends out to Indonesia, China, Russia, Turkey, as well as Europe and America. We'll be doing AMAs with groups, like yourself. We'll be doing cross-community collaborations, which, if it's all right with you, I'll post a flyer for an event that we're already working on.
Oh, that's fine. Yeah, especially with our AMAs, we like to make it valuable to both our community and to the devs. We want to provide value, right? Not just like I said, like all those fake AMAs with 200 in VC where 90% of them are fake. We actually encourage devs to come back after our AMA and always be active in our chat, because if we invest into projects, we want to see devs that are actually working, delivering, and they are busy. They're showing their presence in our group and their Telegram, not just like, oh, thanks for the money, I'll see you in 2 weeks kind of thing. Then that's when we probably won't be holding. We believe in the project when we believe in the devs. That's what really interesting, and it's not really so much about the use case, it's more about the team. That's I think the most important part.
Yeah, so how we intend to grow the project, I think traditionally you see a lot of projects that just dump a bunch of money into calls, which is a very short-term way of growing a project. All you will really attract with that is temporary people that want to buy the pump, and then after the pump, there's a dump, and then they're gone, and they're not with your project anymore. What we're looking to do is grow the project, grow the platform. So we're talking communicating with AMA platforms, cross-community collaborations, strategic partners and affiliates. We've already partnered with a launch pad. We're partnering with AMA providers, with graphic designers, content creators, as well as AMA groups. Additionally, we've partnered with a coding company who will be facilitating some of the products and services that we provide. So yeah, as far as growing it, we were definitely on the right track. And I'm looking to put a lot of our marketing funds in international marketing. For anybody that's never looked into statistics on crypto holders, 4% of the world is crypto holders. So that's not very big. But out of that 4%, Asia outnumbers English, so North America and Europe, 3-1. But a lot of times, all you see projects do is just post on the typical English channels. What we're going to be doing is putting a lot of our resources to international marketing, because I don't think as an English speaking project, I don't really think you need to put a ton of money to English marketing. Provide a few press releases, do some YouTube videos, do some AMAs, and word of mouth will spread. But if you're not putting any resources into international marketing, you'll likely never even tap into that audience, just because your information will never get there. So we're going to be going through a lot of Chinese, India, Indonesia, Russia, places that the project typically wouldn't get to. And all that's already lined up.
Awesome. I like the fact that your Telegram looks 100% organic. I mean, it's still fairly small. Like we're fairly early, right?
Oh yeah,
and
for sure.
So I would like to know what is like the schedule like? When are you planning to? Do you have like a ballpark estimate on when you're going to be doing the NFTs and the sale? And then of course, I'm assuming immediately after, like a day or two later, you'll be doing the token launch.
Yeah, so I'm about to put a post in your Telegram. This is an event that we've been working on for a few weeks now, behind the scenes. Am I able to post a link? Is it going to
Yeah, a link should
block
work.
it? Okay, so here's an event. We've already posted this in all the participating groups. Okay, it says sending media is not allowed. Let me
Media, I'll make it allowed right now because I normally have it off. I turn it on for AMAs.
well, I'll
You
just
should
send
be
it to
able to
you.
do it now. You
I'll
should be
send
able to do it
I'll
now.
send it. Oh, okay. All right, so here you go. This is an event that we've been planning. Very big event, and this is the type of stuff that we're looking to do. So cross-community type collaborations, partnerships, affiliations, to where you can actually get exposure to real people as opposed to just throwing money at a call channel. So here's an event we have coming up on June 5th, which will be a bear market bash, DeFi Expo. We've got 12 projects that'll be speaking. There will be 12 BNB contests with 3 winners. There's going to be 24 random giveaways of $25. Yeah, and those are the projects that'll be speaking at that event.
So it says sponsored by you guys. Like, so what do you mean? Did you like sponsor all the giveaways, or because I mean, there's a lot of other projects here too, right? So
Yeah, so all those projects, what they're doing is providing 1 BNB worth of project tokens, and that goes into the contest pot. We're sponsoring the promoting of the event as well as the random giveaways. And so the 12 BNB contest pot after the expo, we'll hold the contest in our Telegram, and we'll put our NFT series open for contribution for sale. The largest buyer will get 50% of that pot, and then 2 random NFT buyers will get 25% of that pot. So essentially, you put 1 BNB in for an NFT, and you're randomly selected, you'll get 3 BNB worth of project tokens. So
okay, so this
NFT
event,
for free.
it's has a lot of projects in it, but it's all focused on you guys kicking off your NFT sale, yeah.
Well, it's focused on 1, for us to get exposure for our NFT sale, and 2, it's a bear market, so everybody needs exposure right now. So we came up with this idea to where, how can we get exposure for a lot of projects that are good? So all these projects, they're not scams, they're good projects, but we're in a market right now that just kind of is slow. So if we could come up with a way to where everybody could sort of get cross-community exposure, then everybody might get new people interested in their project, to where we could do this without it being a big cost burden on everyone. So that was, one of the contributing factors to us starting this event, is to get all those projects cross-community exposure, and then get our project exposure as well.
Yeah, okay. Yeah, I mean, that's a pretty cool idea, actually. And CLM is one of our partners, so yeah, it's great.
Yeah.
All right, so this is going to be happy. So basically, June 5th, that's going to be the time you guys will be launching your NFTs, right? Right around when you guys are going to be having that expo.
Yeah, so right after the expo, we'll be putting our NFTs open, and then people that buy will be entered into that contest pot. Like I said, 50% will go to the biggest buyer, and 25% each to 2 random buyers.
All right, and what NFTs, right? That you have a floor price, and generally, it's held fairly well, especially if the mint is, like a low amount or affordable for what you get. But it's based on hype, and it's based on everyone trusting and not undercutting each other, not selling, and also it has to be based on selling out the NFTs, right? If there's trouble selling out NFTs, then people are gonna start selling theirs, the ones that they got already, because they're like, oh man, it's not selling out, so let me just sell mine real quick because it probably drop. So do you guys think you'll be able to sell all 250 fairly quickly?
Yeah, we think so. The way we're going to do it is they're going to be pre-minted through us, and then we're going to directly sell them. So any contributions the NFT will be bought directly from us. So that's how we're raising.
Okay,
the
so when you
250
buying them,
BNB.
you won't get a random one. You have to buy like a known NFT one at a time.
No, yeah, it'll be random. You don't get to pick which one you want. That's because we've got 20% of it, so 50 of them are considered rare. And that's the rare ones are just ones with their own unique design. So if anybody's looking at my screen share, going from left to right, those first four, those are the unique design ones. They have a different design in the background. That's how they're classified as unique. The one on the right, which has this little city background, dark city background, the numbers 51 through 250 have that same background. Everybody, all NFT holders, they'll all get 3% of the token volume. They'll all get 45% of the arbitrage bot trades. They'll all get private Telegram, and they'll all get 20% of the interest from the burn fund temporarily. But the rare holders, they'll get put into a monthly lottery. So essentially, the NFT, if the project does well, the NFT should pay for itself relatively quickly.
Yeah, because you'll be able to get all your money back with the is it the burn fund or the lottery? The one that it stops when you get your 1 BNB back?
Yeah, the interest, the 20% interest from the burn fund goes back to burns after everyone's been paid back, but you'll still get the 45% of the bot trades, and you'll still get 3% of token volume.
Okay, cool. Awesome.
Forever.
All right, honestly, I think that's pretty much all the questions I had. So we could open up to the community for any questions. And if you have anything else you want to like talk about, but I think I got a pretty good idea about the project and everything. Like the only thing I see is so with you're gonna be doing the fair launch, right? And it's gonna be like a stealth launch, or you're gonna have everything. Obviously, the contract's already known, right? So you can't really do like a stealth launch. So you're gonna
We're not
basically
looking
do the
to do a
NFT.
stealth launch. It'll just be a fair launch.
All right, cool. And then is there any like mechanisms to prevent sniping? Because I feel like with small liquidity pool and all the tokens are going to be basically in liquidity except for 25%, it's all going to be like circulating. So there's they could be very lucrative for snipers, like assuming if they think that the project's going to moon, or it's going to be a lot of hype. Sorry.
Yeah, I mean, there's going to be snipers regardless. There's only so many precautionary measures you can put in. You can put in block restrictions for the first few blocks to make it only one trade per wallet ID. You can put a gas limit in. You can blacklist known sniper contracts. But I mean, at the end of the day, is it going to matter a week from launch? No.
Yeah. Honestly, like a lot of devs, they're like so anti-sniper, anti-whale. I mean,
a lot of people put
they have to realize.
anti-snipe in because they've done pre-sales. What you don't want is a token to launch and then run up, in price, and then just dump, and then everybody starts, the snipers dump, and then all your actual holders start dumping out of fear, and that puts you below your launch price. But with us not selling a single token before launch, it doesn't matter. Our launch price is not. It will our initial price will not go below that. Nobody can sell to put it below that. Nobody owns tokens. All the tokens are paired to BNB. So we're only going to get buy volume right out the gate. There's not going to be any sell volume. So whether snipers buy or not, go for it. Buy it all if you want. But when they go to sell, it's not going to go below launch price.
Yeah. No, I think that's why it's going to be very lucrative for snipers actually, because like you said, if they could get in at the absolute lowest, there's zero risk for them because they can't get any lower than launch price.
Yeah.
So it's almost like I want to be the first one to buy because I know there's going to be a lot of buys after that, and there's really zero risk of any sells. Or if there are sells, it's still going to be won't drop below my buy price. So that's why I think that it will be like there is a lot of incentive for snipers in this with this token especially. But it's. The thing is, a lot of devs say, anti-whale, anti-snipe, but I feel that I don't agree with that because for projects to moon, or to have the volume, they need those guys. They need the whales. They need the snipers. Like a lot of times, it couldn't have never been listed on CMC or CoinGecko or whatever if there wasn't the volume from the snipers, and like
Yeah.
so just because someone's a sniper doesn't mean they're all like bad people or they're all gonna dump on you as soon as they like go 3x. So there's bad, there's good whales, bad whales, all of that. But I think the thing is, everyone at the end of the day, all they're trying to do is make money in this space. That's kind of like what it really boils down to. No one's really trying to save the world or save the kids. Everyone, in the end of the day, is an investor or gambler. But even gamblers are hopefully they try to make money. So
Right.
so that's cool. So we got actually a couple. Today is the
well,
26th, so in about a week.
Just to put it into perspective. Hold on one sec. Somebody talking?
Yeah, I'm sorry. See, is anyone talking?
Just to put it into perspective of how your contribution will get paid back. So with 250 BNB from the NFT sale, when you're talking about just 3% of token volume, right? So, how much project volume do you need in order for everybody to get paid back just from that aspect alone? So that would equal out to 8,300 BNB, which the current price is 312. So $2.6 million in total lifetime project volume would get NFT traders paid back their initial BNB. But that's going to be expedited because they're getting 45% of the bot trade volume and they're getting 20% of the interest fund.
Yeah, perfect. And the starting market cap is very low too, right? Because you only put in like 100 BNB into liquidity, and most of the tokens are going into liquidity also. So you don't have like huge amounts of locked tokens where you only put in like 5% into liquidity. So the actual market cap itself is going to be very low.
Right.
All right, awesome.
Yeah, it should be around value-wise, the initial market cap should be somewhere around like 130 BNB worth of value, whatever that translates to in fiat.
Yeah,
like
it's like 40K, something like that.
Yeah, like 40K initial market cap.
Yeah, it's a very I say how months ago whitelist spots are valuable because almost every project was guaranteed to go like 5-10x if it was like hyped, and that's kind of like what the value of those whitelist spots. So I think now it's changing around towards projects like this are the ones that you want to get into because a very low market cap, it can't really go any lower. There's a lot of utility,
a lot physically can't ideas. Go lower than the initial market cap. It's impossible. Nobody owns tokens.
Yeah, you guys been audited by Interfi, so like basically it's all about risk and reward, right? There's always something that could happen no matter what. Like even devs get rugged by like unknown devs, or they claim they didn't know the guy. It could be insider job, but there's always things. Something could always happen. So in this space, you don't want to ape life savings into any project. It's all about risk and versus reward, and the projects you want to ape into are the ones that have a low risk to a high reward ratio. That's how you make money. But if you high risk and everything, you're gonna lose all your money very quickly.
And that's what we're trying to change. We're trying to change like, oh, I want to invest into DeFi, but everything's a risk. We're trying to change that mindset because DeFi is here to stay, right? It's the very infancy of it. When email came out, nobody even knew what the hell email was. When internet came out, same thing. But now everybody uses it. Like you have internet on your phone or your watch and you don't even think twice about it. But, a couple decades ago, that was something people looked at as the same as like flying cars. DeFi will be way different than it is today, in 5-10 years. What we want to do is sort of establish ourselves as a platform that is attempting to better it. The whole reason we're starting this is, there's a lot of external regulation being put into DeFi from governments worldwide. And that will not stop until, DeFi corrects itself. You can still have DeFi, you can still have decentralized finance, but have it internally regulated through people such as ourselves or, other vetting platforms. And those are the ones we're looking to partner with. We're not trying to be like the only vetting, auditing, coding project out there. There's other ones that are doing some of the same things. Spywolf, for example, I'll throw that name out there. We're not affiliated with them at all. We would love to be though. They're a project that focuses on, just bettering DeFi through vetting type services. It's not something anybody can do by themselves. If you're a project with the mindset of, well, I just want to be the biggest and the best and, screw everybody else, you're never going to go anywhere, because you as a single platform, you're never going to impact DeFi on that grand of a scale. But if we can turn our platform into a collaborative space with projects, people, platforms that have the same vision and mission we do, we can definitely make an impact. And that's our goal, is to, get as many affiliations and partnerships as we can of people that have the same mindset.
Yeah, I like it. So one thing I wanted to ask still, talking about the vetting. So is that currently something you guys offer now?
Yes.
How does that work? Like, what's the process like, and what's the payment? What do we get? Because that is something I'm interested in also, into looking into that. What do you guys have to offer for vetting?
Yeah, so currently what we have live is project vetting, contract creations, and our arbitrage bot. Pretty soon here we'll have contract audits as well. And then after launch, we'll hopefully have the DeFi Skeptic drops up and running. That just requires the token to be launched first. Two more things that we'll be releasing throughout the year is custodial key services and the merger utility that I spoke about earlier. But how the vetting works is it puts you as a project, and we provide a referral bonus for this as well for anybody that wants to get a project to sign up. Essentially, it will follow our vetting process, which you all can read on our vetting process page. I won't read all that right now, but how it would work is a project would go and click get vetted. They'll start the conversational form. It just says, hey, confirm that you've gone through the vetting process, right? So that's that process again. And then what they'll do is they'll just provide some basic information. So, their website URL. It'll run through and ask them if they were referred by anybody, mention that. It'll provide some checks. So as a project that wants to get vetted, we don't even look at anybody unless they've had a smart contract audit, unless they're either doxed or KYC'd. Their liquidity has to be locked, and their project wallets have to be owned by more than one person. Like, a single dev cannot just be the sole owner. You have to have at least more than one member have access or use a multi-sig or something. And that the main reason for that is not security in the sense of like, oh, what if the dev rugs? It's what if something happens to that person? If the person gets killed and now nobody has access to the project wallets, owner wallet, nothing. So the project can't do what it's supposed to do. So it's more of having a redundancy in there that provides security and longevity to the project. So yeah, we require these 4 things to happen prior to us vetting. And our partner Launchpad, they require the same thing. And once they apply, we'll do a preliminary review on their project.
What was that?
We'll do a preliminary review on their project. If they meet our preliminary checks, we'll make a decision to interview. Depending on how many people are involved in the interview, we require anybody that has access to tokens or funds, whether they're a coder or owner or whatever. They have to be on the interview. People like the community manager and marketing guys and stuff, they can come if they want. They're not required to be. But anybody that has access to tokens or money has to be on the interview. And through that, we'll go through the smart contract, the project details, all their project wallets, dev wallet, deployer wallet, owner wallet, stuff like that. Go through their liquidity, go through their pre-launch and post-launch details, and then get into the team itself. And if they meet our requirements, they'll be vetted. They'll be able to advertise the DS vetted badge. If they don't, it's not going to be announced. We're not going to say like, oh, these guys didn't pass our vetting. We don't want to, put a negative rep on anybody. But we'll provide them our summary report of why they did it and recommendations in order to, get vetted. So if they come back to us later and say, hey, we fixed these things, here you go, here's your stamp. And that's essentially how that would work. The price to go through our vetting is $150. So whether that's paid in Smart Chain or Skeptic tokens. If it's in Skeptic tokens, you'll get a 10% discount. That's a very small fee. There's auditing companies and other vetting sources out there that are charging thousands of dollars. I would just ask the question, why? Why are you charging thousands of dollars? It's just because of the hype that's in the space right now. There's no reason to charge that much. $150 is enough to pay us for our time, but not rip anybody off. And as we grow and things become a little more time consuming, maybe that goes up slightly, but you'll never see us charging $20,000 for a vetting or even 10K. Maybe the most it ever reaches to is like $500. We're not in the mindset or business of trying to rip people off.
Yeah, the only thing you gotta be careful of is when one of your vetting requirements is an audited smart contract. Not all audits are created equal. So there's a lot of audits that passed and it still had issues with the code, or there's mint functions basically got rugged. Even Certic, I think, past audits where there's issues. So I would say that's something to definitely think about, and maybe have only like a whitelist or blacklist of audits, because like I said, like some of them cost $10,000 for an audit, some of them cost $100, or just run through a script. And maybe you should be looking a little bit closer at those types of contracts.
It's not necessarily who the audit came from. It's the fact that they've taken measures to get their contract looked at from an external source other than themselves. I don't care if they went through Certic or they went through, somebody that charges $100. At the end of the day, it's a matter of, I, as a dev, have took some measures to get my contract looked at by somebody other than myself. We're going to look at it as well, regardless of if it has an audit. We're still going to look at it. But the purpose of having an audit prior to us vetting is to ensure that they've taken measures on their own to look for vulnerabilities within their contract.
Yeah. Okay. Yeah. Fair enough. All right. Awesome, guys. I like the project, and I'm pretty satisfied with what I have got out of it. All the knowledge I have from this since the AMA started. So let's go give the community a chance. Is there anyone in the community that has any questions? So we'll do the questions. If there's any questions, we'll end the recording. And after the recording is done, we'll do the giveaways. And basically, I'll have announcements to make about our YouTube channel. So this project is going to be going up. This AMA is going to go up on the YouTube channel. We actually created it yesterday. So we have a couple AMAs we're going to be uploading. This will probably be the third one. We uploaded one already. So this is like another way of promoting projects or exposure for projects to have AMAs with us. So yeah, great project. I think I really like the unique ideas that we haven't really seen much of in this space yet. And it's not just a copy and paste, meme token or some kind of shitty game. Because a lot of times I'm like face palming on myself, like not another shitty game where they just paid a Fiverr guy to produce a 5-minute or like a 2-minute video. Most projects don't even have a game. They like have some kind of trailer, or they use free assets from Unity or Unreal Engine. So it's not a lot of quality projects right now in this space. So yeah, thanks. Thanks for having an AMA here, coming here. And any questions, guys? Let's go.
Yeah, looking forward to any questions from anyone.
Good day to you. I came in a bit late, so I was just going through the website. I just wanted to ask you about what will roughly be the price for your contract creations for your NFTs, just a rough figure at the moment.
So the two separate things there, I think. Are you asking what will be the price of our NFTs that we're launching?
It's a single question with regards to the contract development, the NFT development, the solution that you will be providing.
Yeah, you'll have to get a quote. So on that services page, apply for a quote. It depends. I mean, if your token is complex, it might cost a little more than a non-complex token, or it just depends if you're looking to get tokens, NFTs, dApps. Yeah, price can range. Really just depends on the needs of the project.
So is it going to be like templates, or is it going to be custom contracts mainly?
Oh, these will be custom contracts. Yeah, they're not provided from like any cookie cutter website or anything like that. I mean, if there's a token that just wants like a basic tax token, yeah, I mean, the next project that wants a basic tax token, they'll likely use the same template as the other one just because their requirements are the same, but it's full customization of your token. There's not going to be like any, random functions in there that don't need to be in there. It's totally customized towards what you need as a project.
Okay, yeah, I see that you guys are actually partnering with dApp, so they'll be the ones creating the contracts.
Correct. Yep.
Okay,
Right?
cool. So other than the part of the tokens, let's put tokens aside and let's look at it as a company by itself. How will you be planning to eventually bring this brand out into the market and eventually convince people that Skeptic is the number one solution when it comes to vetting, when it comes to audit, and when it comes to contract creation?
Yeah, so that's not our vision. We don't want to be the number one. If we could be the number one, that would be awesome. But my goal is not to be the number one vetting platform, the number one contract creator. That's not something we're trying to achieve. What we're trying to achieve is a platform that provides those things, but in a manner that is beneficial to the space. Our primary goal as a company is to make DeFi better. That's by providing these types of services, ones that are focused on developers, focused on the users, focused on ethical project promoting. And we're going to get there through strategic partners and affiliates, as well as I'm a firm believer in, bringing your project globally as opposed to just restricting it to, your racial, zone. So like I'm an English speaker, I live in North America. I'm not just going to try to keep the project within North America or Europe. The primary funds, the bulk of our funds is going to be put towards international marketing when you're talking about marketing funds. Asia alone outnumbers North America and Europe together. Asia outnumbers them in crypto holders 3-1. So the bulk of our marketing funds is going to go to Asia because that strategically makes sense. Like, why am I going to spend, the bulk of my money to market to English speaking people when I can market to Asia, and get all that different, people brought into the platform, and they outnumber English speaking people 3-1. So it doesn't make sense, strategically to spend your money that way. So yeah, that's where the bulk of our marketing funds is going to go, is to Asia. And that'll include, India, Indonesia, China, Russia, pretty much all the main crypto holders.
Project. Thanks, Chris.
Yes, thank you.
Any more questions, guys?
Either everybody is super excited and has no questions, or everybody is just shy.
Yeah, I probably covered most of it. I think we actually had a pretty good AMA here, so a really nice discussion. There's not really much else to cover. So so the TLDR is June 5th or so, right? That's going to be the NFTs. The NFTs are going to fund the token. There's not going to be no outside tokens. It's all going to be circulation, except 25% will be locked. So there's like zero risk of really going below start price. And the only risk, if any, would be the NFTs. If you buy the NFTs, it might drop below, but then you could always buy more. And of course, the NFTs are going to have value to them. And holding NFTs is going to be like the reflections. So instead of the tokens, it'll be the NFTs. It'll provide reflections in a way, the taxes. So that's an incentive of the NFTs. And there's currently, you guys already have use cases active, like the vetting part and the other part. So it really is just it's going to be how you guys manage to, you know, get the customers, I guess. All right, the more customers, the more known you are, the more people using your services, like the vetting, the contract creation, the arbitrage, all those, the more value is going to bring to the NFTs and to the tokens. And that's kind of what you guys are, that's what it's all about, right?
Yeah, just growing the platform through working with as many, you know, different communities as we can, devs, users, projects. Our goal is not to, you know, just have the mindset of, oh, hey, I'm going to do all this by myself and everybody else is competition. I don't view any project as competition if they have the same mission and vision we do. They're an ally, right? Because they're looking to do the same things we're going to do. So if we can partner with them to facilitate our goals that are the same, then both of us win. You know, there's no reason to view them as competition. I think a lot of projects get bent around the idea of competition. You know, it's more so along the lines of like if you're putting out a meme coin or something, you want to be like the top meme. I get it, right? There's not really any way to collaborate with a meme project, but a project that has specific focus, you know, I think somebody's got music playing.
All right, let me go take care of that. Oh, it's hilarious. What is it? I don't see anyone muted though.
That's weird.
Do you see anyone?
No,
Everyone's muted.
No, I don't see anyone's mic on either.
That's weird, man.
Oh, I think it
But
was
yeah.
Bender.
No, it wasn't.
Huh.
Yeah, man, I'll leave it at that. If anybody has questions, you know, feel free to hop in our Telegram and ask away. We'll hold some AMAs, you know, internally to our Telegram as well.
All right, awesome. So if you want to do like a closing statement, like you know, like thanks for the AMA. By the way, guys, join our group. And also, I want to say something. Everyone, guys, that it's in here, please join their group and show support. Show the power of anti-ruggers. This is still early on. You know, they haven't had many AMAs yet. You know, this is still like
already
a couple days, right? We still have like still fairly early. You have like a couple days, like over a week until NFT mint. So this is a good time to get in there and you know, do your research, find out more about the project, and show them some support, guys. And is there anything else you want to say?
No, that's it. I think we've covered everything. Appreciate the time. You know, thanks for having us, and we look forward to working with you guys in the future.
Yeah, thanks again, and great AMA. And with this bear market, man, I think this is one of those that has a good potential because, you know, low market cap, a promising utility. So yeah, let's go.
Yeah, tune into our Bear Market Bash Expo next weekend, June 5th at 5 p.m. Eastern and 9 p.m. UTC. There'll be 12 projects attending, 12 BNB contest pot, and 24 random giveaways of $25.
Yep, and see you guys over there. And I'll end the recording right now. So everyone, again, thanks for coming.